OC Financial Media presents, in association with CHL Mortgage, as heard on KTLK AM1150, from LA to Orange County.
Your host, Dino Katsiametis.
It's about your real estate. It's about your money. From your estate to real estate, it's Money Matters with Dino.
Welcome back to Money Matters with Dino on K-Talk, AM1150. If you have any questions for myself or my guests, or if you need help with your money matters, give us a call at 949-720-1616. That's 949-720-1616. Or check us out online at moneymatterswithdino.com. From your estate to real estate, we're here to help. This segment is brought to you by Reverse Mortgage Educators. These guys have been on the show a few times now and have absolutely made me a believer. If you're over 62 years of age and having trouble living on a fixed income, or you just want to enjoy your retirement, get in touch with Reverse Mortgage Educators. Call me direct at 949-720-1616, and I'll explain to you how it works. That's 949-720-1616. And also, before we get started with the show today, again, I want to introduce our new little home evaluation method or process deal that we're giving out. Text the word appraisal to 313131, and once again, just text the word appraisal with your address, and we'll have one of my trusted advisors contact you within 24 hours with an accurate value for your home. Okay, joining us today on our discussion panel with the experts are Tony Alesandro from Insurance Solutions and Craig Lack from Energi USA. Today our topic is, own a business? How much is insurance really costing you? Welcome to the show, guys.
Thank you very much for having us.
I am looking forward to this, especially with what a lot of us can consider the high cost of insurance, and your expertise, I think, will really help us out in kind of digging in a little bit as to what's really necessary, what's not, or what you can adjust here and there to just to make it affordable for people. And then on the opposite end with Obamacare. Boy, do we have some big changes coming up that you're going to be able to really educate everybody listening on. So,
absolutely.
If you guys don't mind, let's just jump right into the questions. So I definitely, again, I want to talk about Obamacare because that's one of the really big ones. But before we get too deep into that, let's talk about all the different types of insurances that people don't normally think about. First off, what's covered in general liability? And then kind of give me that little list, a punch list of all the different kinds of insurances.
Okay, so for general liability, it covers the bodily injury or property damage that you could be found legally liable for in your business. So let's say we have somebody coming to your office or coming to your restaurant and they slip and fall. You could be covered for general liability for that slip and fall lawsuit. A lot of the policies have coverage for libel, slander, false arrest, defamation of character. Mm-hmm. When now we're going out and using social media and we're putting posts up there, we have to be a little bit more careful because we could be held liable for the words that we put online as a result of defaming another business. So we have to be careful for that. Now, if you're a business owner and you're doing it and posting it and you get sued for libel or slander, you have coverage under your general liability policy. So it's broader than just bodily injury or property damage. It does cover additional areas there.
So as you're saying that, I thought of a story when I was younger. My dad has had several restaurants, and growing up, I as any typical Greek kid, grew up flipping burgers and, in our case, rolling burritos. But I remember my dad was doing a big remodel on his restaurant, and some lady said that she slipped and fell, and it just absolutely ruined her life. And she obviously couldn't work. And she no longer feels sexy like a woman because she can't wear high heels. She hasn't been able to go dancing, and her love life has gone down the tubes. So she was coming after us hard, and the insurance company hired a private detective to follow her around and basically squashed the case because she was out dancing in high heel shoes during this whole time. So it pretty much proved she was a liar. But again, one of these things where without the insurance, that could have absolutely crushed my dad in any other type situation.
Well, we've gone through some tough times since '08, and we see all kinds of crazy amendments to lawsuits, and it's just amazing. Desperate people will do desperate measures, and you'll be amazed at what they would sue you for. And we see that a lot in the business environment when we have employees that we let go and they don't have a paycheck waiting for them. So quite honestly, when they don't have something waiting for them, they'll come up with all kinds of accusations and reasons that they deserve to extort you more than anything else, like she did your father.
Right.
It's nothing more than extortion. And
is,
so we typically are the ones that write the check to defend you.
Got it. Now, what are all the number one type of unsecured claims that you see?
Gosh, lately we've seen a lot because of companies downsizing here in California with employees being laid off and let go. They're suing the employer for wrongful termination, harassment, health-related issues along ADA type issues. So with that increase or spike, that's a coverage called employment practices liability insurance. Okay. So we have about a 36% exposure to employee-related claims versus a 4% exposure to a fire. So right now, most of the employers out there don't realize or recognize that they have a greater exposure to being sued by their employees than they do having a fire in their business, and they spend all this money on fire insurance when really what's burning down is this uninsured loss that can run away to $80,000 to $150,000 in settlement costs.
Got it. Wow.
Dino, we like to call that the lottery wheel of justice. And the plaintiff's counsels literally spin the wheel, and they come at you with a certain accusation, and then if that doesn't have traction, then they just move on to the next one.
Yeah, it's insane, huh? I mean, it happens that often. Wow.
And honestly, many of our employers, no matter how much we bring it up to them, they don't even provide the coverage for themselves. They don't buy it for themselves. They'll protect themselves from everyone else suing them and coming at them, but they don't protect themselves in this area, and it's not that expensive.
Now, what about workman's comp? Does that cover any of that stuff, or is that just for injury to employees?
Strictly injury to employees. So if they're on their job or if they're working from home and they're a virtual employee, you're still liable for any injuries that happen to them. They may be driving their family to church in your vehicle. That's a real common occurrence. They're covered on your workers' comp policy, believe it or not. If they get injured and they're driving your vehicle,
wow,
it could be related to company.
And what about the children that were in the car?
They're not covered on your policy at all.
Okay.
They would be covered under the business auto policy, and they could sue the business.
They could sue the business for that.
Let me give you an example of how healthcare is related to workers' comp. Tony, what day of the week do most employees make their claims?
Monday morning.
Monday morning, because the weekend warrior probably got injured. And so one of the things and the reasons we play off each other well is because we can't just operate in a silo. So healthcare, if you're let's just say a cheap employer and you don't provide good benefits, they're going to make a claim on workers' compensation. And the difference between healthcare claim, which you pay once, and workers' comp claim, which you pay 3 times, which Tony can explain, is a significant cost to companies. So they need to be cognizant of the fact that healthcare and workers' comp are really 2 sides of the same coin.
Now, workman's comp, that number, it's put together by what your payroll is for the year, right?
Correct. It's a certain rate assigned to your classification of what your employees do times the payroll that you have. Now, they can change that rate based on your experience. As Craig mentioned, if you have an adverse experience or a history of Monday morning claims, for instance, that come in because they don't have health care, and we're taking that burden as a workers' comp claim, then your premiums can skyrocket as a result of too many claims being filed against you. There's an experience modification that allows the workers' comp system to increase your premiums based on your own individual experience, unlike the healthcare system where there are limitations to how much they can increase your premiums each and every year.
So years ago, right out of college, I was in the retail business. I had a few vintage clothing stores and stuff like that. And my gosh, I never bothered with certain legal aspects like workman's comp, right? And then I got bigger because I opened a few stores up, and next thing I know, I'm having to get workman's comp, and they found out I hadn't had it for the last, I think, 2 years or something, and they made me pay for it for the previous years. Is that how it works?
Not always. It's kind of crazy, but
Or did I just not have a good insurance guy at the time?
I think you needed another advisor because there's other ways to go about
Tony Alesandro, where the heck were you 20-something years ago? All right. What about property insurance? Does it also cover interruption of service and loss of earnings?
Yes, it does. As a matter of fact, I kind of have a story for you. I was meeting with a client yesterday, and he was asking me the question. I said, hey, Tony, we had someone come out here and steal the actual water main pipe outside the building. It was a copper pipe worth, who knows what the price of copper is worth today, but they shut off the water, and he was interrupted by 3 days. It cost him thousands, if not tens of thousands of dollars of interruption. A lot of policies do not cover the disturbance of a utility off-site within so many feet of the building. We typically make sure our clients are protected for scenarios like that. So the loss of utility can also be covered on a property policy, and the loss of revenues that stem from the lack of being able to open his business for 3 days is covered. So business interruption is probably one of the most important coverages that a business owner should have on his policy.
Okay, interesting.
So think about it, because you're a Greek background, and you said your family had restaurants, right?
Yeah.
Everybody eats cake.
Yeah.
Everybody uses the same ingredients, right? But it doesn't all taste the same.
Right.
What's the difference? It's the chef.
Errors and omission. Tell me how that works.
Well, being in the real estate business, mortgage business, as you know, and professionals like you and I, we need to have errors and omissions. For some reason, one of our employees or even us, as Craig articulated, there may be an ingredient we forgot. And, this happens. We're all human. Should that arise out of a claim in your business, you would have the opportunity to sue me. So we buy, as insurance professionals, as lawyers, architects, engineers, the professional liability to protect us from lawsuits that come against us, just like doctors buy malpractice. It really is one and the same, but for doctors, they call it medical malpractice. Okay. So as a professional, that will protect you from lawsuits for your professional recommendations.
You're listening to Money Matters with Dino on K-Talk AM 1150. If you have any questions at all about anything you hear here today, call us at 949-720-1616. We have our insurance specialists here today, and they're here to answer your questions. Don't wait. Pick up the pen, write this number down, and call us at 949-720-1616. I also want to remind you that I am an insurance broker. I mean, here I am. I'm not an insurance broker. You guys are. I'm a mortgage.
So you're human too.
I'm a mortgage broker. I warned you guys ahead of time that I'm dragging today. So I'm a mortgage broker, and in this market, there is so much happening on a regular basis. The market is absolutely crazy right now. It's extremely complicated. So the one thing I am good at is real estate. I have a lot of knowledge in it, and I don't do every aspect of it, but I know very competent people that do. So I truly believe in putting together a good team around you that can help you with your needs. If you need help putting that team together, call me at 949-720-1616 or check us out online at moneymatterswithdino.com. Let me help you put that team together and help you make the best real estate decisions for you and your family. Stick with us. We'll be right back after the break and continue our panel discussion with the experts. Today our topic is own a business. How much is insurance really costing you? We'll be right back.
50 years ago, you didn't have any worries. You danced the night away. But the music slowed down. And now you have financial worries and woes you never thought you would be faced with in retirement.
I'm so afraid that my husband and I aren't going to be able to afford to live in our home.
Thousands of people have chosen to put a spring in their financial step by taking advantage of a government-insured reverse mortgage loan that turns the equity in your home into tax-free cash. You can use the cash for whatever you want. Pay off medical bills, credit cards, travel, and start to enjoy your retirement. Best of all, you still own your own home. Call now. Find out how you can qualify for a life without monthly mortgage payments. Call now, and we will send you a free DVD that will explain if a reverse mortgage is right for you. Call the number on your screen right now. No obligation, just education.
Mortgage professionals, are you looking for a company that values you as a loan officer? One that can provide you with the tools you need to grow your business at your pace? Then look no further than CHL Mortgage. CHL Mortgage provides you with a full range of residential loan products and services. You'll be backed by an exceptionally trained team of professionals that can take your clients as seriously as you do. Your clients will be treated with dedicated service, personal integrity, and exceptional professionalism. You'll be able to guide them in the right loan with competitive rates and keep them on the road to achieving life's goals. To get started on advancing your career, call Dino with CHL Mortgage at 949-720-1616. That's CHL Mortgage, 949-720-1616.
Welcome back to Money Matters with Dino. If you have any questions at all for myself or my guest, pick up a pen, write this number down. 949-720-1616. That's 949-720-1616. From your estate to real estate, we're here to help. This segment is brought to you by Citywide Home Loans. And Citywide Home Loans happens to be the wonderful company that I work with and for. And I would love to say that we have the best rates and the best service and the best everything, because we do. But I'm not going to, because everybody says that on the radio. I'm here to tell you that we actually have people that care about you. You're not just a number, and you're not going to get lost in the shuffle. We will absolutely individualize every process according to our client, because every client has personal needs of their own, and that's what we do here. We're true professionals, not just myself, but everybody I work with. So if you have any mortgage needs at all, or just real estate needs in general, call us at 949-720-1616. Also, we're providing this new service. If you want to know what your home is worth, the real current value of your home, text the word appraisal and your address to 313131. That's text the word appraisal and then your address to 313131, and I will have one of my trusted advisors do a complete analysis of your home and get back to you within 24 hours and give you a real good detailed explanation of what your home is.
I just want to jump in here for 1 second about that, because you were talking about comparing it to Zillow, and Zillow is way behind where the market is right now.
Why is it every time I bring up big companies, you always look at me and be like, "No, don't talk about it."
Well, we're gonna do it now, because now
so you can do it.
I can do it
when you feel strongly about something. You can do it.
Yes,
right.
I can. They are
Zillow sucks.
Did I say that? I'm just saying they're about 50 in their Zestimates or whatever those are called. They're about $50,000 behind where properties are actually selling for. So what is the value of that? Like, you really need a more comprehensive.
Well, it's more than that. I remember looking up one of my old homes, and it had the dollar figure, and then the house right next to me was like $50,000 less, and then a house across the way with no view was like $75,000 more. And it's like, come on. It's ridiculous. I mean, their algorithms, as cool as the whole site is, and it really, I mean, you can do a lot of research on it, which I like. It doesn't satisfy the need of trying to find out exactly what your home is worth. And I want to let you know that we're not going to have a bunch of pesky real estate agents calling you and all that. We want to provide the service to you. So just text the word appraisal and your address to 313131, and I'm going to have Phil call up Zillow next and apologize.
Right.
All right, so
we're not slandering.
We're not slandering.
No,
and we
not
don't
at
have
all.
insurance for this, do we? All right, we're in the middle of our panel discussion with the experts. Our topic today, in case you're just tuning in, is own a business. How much is insurance really costing you? By the way, Phil came up with that one.
You say that like it's a bad thing.
It's not a bad thing. I like it. Of course, if you missed any part of the show and you want to catch it in its entirety, just go to our website, moneymatterswithdino.com. I'm sure the show will be up by Monday if Mike can get around to it this week. And if not, it's always on YouTube. We have our own YouTube station. It's called Power Players Radio. We have all our past shows over there as well. Joining us today is Tony Alesandro from Insurance Solutions and Craig Lack from Energi USA. And they're answering all our insurance questions today, which I find really fascinating because this world we live in, really, it revolves around insurance. It appears many times over that why the hell am I paying so much money for all this stuff? But I got to tell you, you never know what you need until you need it. And insurance is one of those things that, you know, if a fire happens, if in this case, if you're an employer and an employee slips and falls or hurts their back or whatever the situation is, my gosh, your entire life, your personal life as an employer can end just like that. You lose everything you've worked for your entire life if you're not covered. So somewhere in that equation, you have to have a budget for insurance. And from my experience, because I've owned several businesses, and you know, and you have to have a reputable insurance agent, somebody that is a business owner of their own, somebody that understands what you're going through and can guide you along the process of what you really need and how much coverage you need on everything. Because at the end of the day, you don't really need to be over insured on everything. But I know, and Tony, I'm sure can tell us, there's some parts of insurance that it can never hurt to just be overinsured on. Others, you just have to have the minimum. So just always have somebody you trust. And we preach that a lot in this show is, you know, deal with people that you like, deal with people that you trust. Good things will come of that. Don't always look, especially online, don't always go online and look for the cheapest of something, because that usually doesn't work out very good. So anyways, back to our panel discussion. I just got off on my little rant here. Go ahead.
No, that's okay. So Dino, to your point, us business owners, I'm a business owner like yourself, we put all our blood, sweat, and tears into our business, and literal tears at times. And we don't want to put our business at risk when it's the livelihood and the bread and butter that feeds our families. And if you don't have the right advisor or the right plan, when I hear a business owner call me for assistance or referred to me, I find it fascinating. 9 out of 10 times, Dino, when I go out and do an analysis and a full top to bottom on their business, they're underinsured, and they thought they had the right coverage. I'll give you a prime example. One of my clients of many years, when I first met them, I was referred into them, I looked at their insurance policy. They're with a very reputable company, and most of the companies are reputable. To Craig's point, it's really the architect or the chef. So when I went in there and I looked at their office, at a glance, I thought $30,000 that they had on their contents was sufficient. I said, well, give me a tour of your place. It was a warehouse distribution center. They import and they actually manufacture the extension cords and plugs to many of the appliances that we have in our home. And so when I went into the warehouse, I was amazed that I saw that they had product stacked to the ceiling and 2 cargo containers outside the back door.
Wow.
I said, knock on wood, God forbid, should there be a fire tonight, how much would Tony Alesandro have to write you a check for? They said $3 million. I scratched my head and said, let me see here. So today, your advisor has $30,000. I think the insurance company would be happy to write you a check for $30,000 and run for the hills.
Yeah.
So really, what is it costing you when you say the title of our show today?
Yeah.
It could be costing their life.
Yep.
It could cost them everything. In that scenario, it's going to cost them over $2,970,000. Yeah. So it can cost you everything if you don't have the right architect. Okay. So I wanted to go to that point. And when you're saying what kind of value can we bring and a takeaway for our listeners today, when I look at a plan and I see a low deductible on a property policy, and property isn't the most expensive insurance, but it can be in that scenario I just gave you if you don't have the right limit. The deductible of $500 usually makes your agent a lot of money, but not you. There's a point of diminishing return too. If you have too high a deductible, the premium savings could be minuscule to take a high deductible, and it's in the carrier's favor. Just to take away, guys, I think $1,000 deductible, what I've found over the last 30 years, tends to make sense for everybody.
Great advice. Great advice. Thank you. You know, I want to get to Craig because this Obamacare thing is something that I'm really interested in. And It's and Tony, no offense, not that I'm tired of talking to you or that you talk too much, but
it's an Italian thing.
I can tell. But anyways,
put a sock in it.
Craig's sitting there just nodding his head all the time, and I want to get him involved here because he's just dying to tell us some of this stuff. What's going on with Obamacare? Give me the quick, down and dirty, like what's happening. And October 1st, I think, right?
Wow, that is a really broad question. So let's just say, without getting too political, that like all government intervention, it's a wonderful illusion that a lot's going on, and what actually happens remains to be seen. So the gist of it all is that the government has now mandated a lot of new rules about how health insurance carriers operate in the United States and how its citizens need to go about purchasing health insurance in the United States. So it affects every company in the United States with one or more employees.
One or more?
Yes.
Wow.
Yes.
Now, does that include 1099 contractors?
1099 contractors are not employees. Now, that's the subject of a whole nother show based on all the new rules on how to qualify as a real 1099 employee versus what companies are actually practicing.
Right. One or more. Unbelievable. Okay, so in general, what's like a mid-sized company in America?
So in insurance, from the insurance carriers' perspectives, they consider small groups in the United States to be 1 to 50 employees. And everything 51 or more is kind of the delineating number where the law impacts employers. There's the below 50, 51, and 51 and above. So we can address that as two different consequences, if you will.
Let's just say somebody had, like a restaurant, for example, might have 30 employees. How much would come out of their pocket at the end of the year with this new Obamacare plan?
Okay, let me add some context to that. So if you're there's two major provisions in the under 50 market. There are basically a lot of new insurance options available to those size employers. Okay, so I'll get back to your 30-person restaurant in a second.
Okay.
Above 50 employees, that's where all the penalties that you've heard about, the $2,000 per employee penalty and the $3,000 per employee penalty. And so that really deals with the middle market. Okay, probably 5% of companies in the United States, 95% are smaller than 50.
Okay.
So the fact of the matter is that 5% insures Fortune 100 companies, so they actually have the preponderance of enrollment in the country for commercial insurance, but small companies are impacted by this too. So the big companies, it's really quite simple for them to avoid the penalties, which were deferred by a year. Much of this law, keep in mind, passed 3.5 years ago, was written as an idea, but it wasn't a written law. Although it was 2,800 pages, it's now like 28,000, and they're making it up as they go.
Right.
So consequently, we've had a lot of start and stops. And so the big start and stop for middle market companies was the fact that all penalties were delayed until January 1, 2015. So nonetheless, in the 1 to 50 market, there's a lot of things that start January 1. So to get to your example of a 30-man restaurant, they're going to be looking at, let's start with, do they have insurance now for their employees? If they have health insurance now, they can keep it. There's a lot of, you'll see a lot of articles, they call it pay or play. So do they want to keep paying their currently purchased health insurance, or do they want to stop paying and let the employees buy insurance on the state exchange called the SHOP?
Interesting. Okay.
So you can, as an employer, decide, I'm going to keep contributing towards the insurance like I have been. I'm going to stop paying insurance and let the employees buy their own on the exchange because it may be that they qualify for a subsidy. That's the other big item that you've heard all the news about is based on your income level, you might qualify for a subsidy.
Do you know offhand what that income level is?
Well, it's up to 4 times the federal poverty level. So it's about $93K for a household income.
Okay.
The lower you are, the more you get from the government. And basically what the subsidy does is it buys down your premium. So instead of paying a retail premium, you're going to pay a wholesale rate.
So I'm a little confused. I thought this whole thing was that the employers are mandated that they have to buy insurance for the employees. But you're saying that they can choose to not buy insurance at all?
Correct. There's a lot of misnomers about what the law includes and doesn't include. So what it includes for sure is that citizens in the United States are required to buy health insurance or pay a tax.
Okay.
Now, lots of news stories about how the government is trying to market with lots of third-party influential sources to get the young, healthy people to sign up. Keep in mind, they created this law under the auspices of we need to insure more people and make it more accessible, right?
Right.
But the penalty if you don't buy insurance as a single citizen in the United States next year is $95 or 1% of your pay. It's estimated that for people on the low-income side who qualify for a subsidy, the premium is still going to be $75 to $100 per month, even after the subsidy. So if I'm a young, healthy 26-year-old of twisted steel and sex appeal, I'm not buying insurance because it's going to cost me $95 or 1% of my pay, and I'll have to pay that in 2015. Not only that, I get to wait to see if I get sick, and then I could always buy insurance from one of the other insurance companies outside of the exchange.
Outside the exchange.
So there's a lot of moving parts to this thing, and it keeps changing all the time.
All right. Well, hang tight because we got to take a quick break, and I want to dig into that a little bit more because I had no idea what was happening there, but there's some interesting facts that I want to get to know a little bit more about. If you just jumped into your car, you're listening to Money Matters with Dino on K-Talk AM1150, and we are talking about insurance today, and it's really just a topic that all of us need to be informed about, and we have to have true professionals that we can count on to be educated by it. If you have any questions at all for the professionals, for our panel of experts that we have here today, call us at 949-720-1616. That's 949-720-1616, or check us out online at moneymatterswithdino.com. This last segment was brought to you by Citywide Home Loans. From your state to real estate, we're here to help because your wealth is my business. Stick around after the break. We get to talk with these professionals just a little bit more. We have, about 15 minutes left, Phil? Or so?
8.
Let's go. We got to go. Break. Bye. We'll be right back. Hang tight.